Forget that iPhone unit sales were not as strong as many had expected, that the revenue forecast fell short of the average estimate, and that there was no clarity on Apple Watch sales. Analysts, for the most part, remain as upbeat as ever on Apple Inc., AAPL.O, after investors knocked more than $65 billion off the company's market value in initial reaction to the company's quarterly results on Tuesday. Only one of 19 brokerages that issued reports assessing Apple's earnings cut its rating on the stock. Of the rest, 14 kept their buy or equivalent rating and 4 hold. We believe Apple's future prospects have never been brighter, Cantor Fitzgerald analyst Brian White said in a research note, maintaining his buy rating. Investors remained wary, however. Apple shares, which have risen almost 19% this year, were down 5.5% at $123.60 in early trading, representing a loss of about $50 billion in market value. As Apple has become the gold standard of technology, it is held to a higher standard, said FBR analyst Daniel Ives, who described the iPhone maker's quarter as good but not great. Most analysts looked beyond the immediate disappointment. With a new iPhone around the corner, the seasonally stronger quarters ahead and a possible Apple TV update, coupled with valuation, we would be buyers on weakness, said analysts at Robert W. Baird, who rate the stock outperform. J.P. Morgan's Rod Hall was among those who said the stock's fall had been overdone, noting among other things the better-than-expected average selling prices for iPhones in the quarter. Rise of the middle class. Growth in emerging markets such as China and India, where many believe Apple is likely to take market share from Android, is key reason for optimism, analysts said. We believe the company is positioned to exploit the rise of the middle class in these geographies over the next several years, William Blair analyst Anil Doral, who has an outperform rating on Apple, wrote in a client note. Apple's iPhone sales in China more than doubled in the quarter to $13.23 billion. Total iPhone sales rose 35% to 47.5 million. While that fell short of the 49 million many analysts had expected, NBC's Mark Mahoney noted that only 27% of iPhone users had migrated to iPhone 6. This, he said, suggested the iPhone SIX's refresh cycle will benefit the tail end of the September quarter and drive growth. Piper Jaffray's Gene Munster also noted that growth in iPhone sales had outstripped overall market growth, which he said was in the low teens. Munster raised target price on the stock by 6% to $172, while maintaining overweight rating. Of 48 analysts covering Apple, 16 have strong buy rating, 21 buy, 10 hold and 1 sell, according to Thomson Reuters data. The median target price is $150. Only Cowen and CO analyst Timothy Arcuri downgraded Apple on Wednesday, to market perform from outperform. Despite rising 40% in the past year, Apple's stock still trades at a significant discount to that of tech peers such as Google Inc., GOOGLO, and Microsoft Corp., MSFTO. As well, the stock's current price-to-earnings multiple of 13.7 is well below its 10-year historical median of 16.2. Google trades at 22 times forward earnings, and Microsoft at 17 times.